Hello traders, this is Joanne with Succeed in Forex. Welcome to our Forex market news broadcast for Wednesday, March the 12th, 2008. The headlines out of Switzerland this morning read, Fed new liquidity measures lowered market expectations for a strong interest rate cut. The dollar posted sharp gains on Tuesday after the Federal Reserve announced a new measure to inject liquidity into the financial system, easing concerns about a deepening credit crisis and a U.S. recession. The dollar surged against the yen and the Swiss franc after the Fed said it would lend primary dealers up to $200 billion in Treasury securities and allow them to use agency and mortgage debt as collateral. It also rebounded from the record low against the euro following the announcement of the liquidity measures, which will be coordinated with other central banks. The dollar-yen hit a 103.60 high yesterday, well off an 8-year low of 101.42, which it hit last Friday. The euro-dollar retreated from its all-time high of 154.95 yesterday and fell as low as 152.83 before edging back up to 153.39. The dollar Swissy rose to 103.27. The euro-yen strengthened to 158.42. High-yielding currencies rallied sharply against the dollar and the yen, with the New Zealand dollar raising to 80.16 as risk appetite returns. The Fed's action cooled market expectations for a sharp interest rate cut at the U.S. Central Bank's March 18th policy meeting, and took some pressure off of the dollar. U.S. interest rate futures were pricing in a 64% chance that the Fed would cut its bench rate to 2.25% from 3% next week. Such a cut had been fully priced in before the Fed's move. Some foreign exchange market participants said the dollar's gains were probably not sustainable, especially as recent U.S. economic data have been almost universally gloomy. Some economists believe the United States is already in a recession. Also on Tuesday, the U.S. Treasury Secretary Henry Paulson said long-term U.S. economic fundamentals remain strong. The European Central Bank's governing board member, Axel Weber, hinted that the ECB had no room to cut interest rates, saying German inflation remained a concern. The ECB has held rates at 4% throughout the credit crisis, stressing inflation risk. During the Asian session, the Asian stocks followed the U.S. rally. The dollar was slightly weaker in the Asian sessions as markets opened with a renewed sense of optimism. The Fed's coordinated liquidity measure made available through a term security lending facility was just the latest innovation in monetary policy from what is turning out to be a very unorthodox administration. The initiative was well received by the U.S. markets, with the Dow surging 3.5% and the U.S. dollar gaining across the board. In addition, this operation was good for riskier assets, such as the Aussie and the Kiwi, and selected EM pairs. However, the euphoria didn't last for the U.S. dollar, as it came under renewed selling pressures as the Asian day progressed. Markets were quick to recognize that the Fed's move would provide only temporary support, giving financial institutions a little maneuverability, preventing any potential fire sales, which could disrupt credit markets. The Fed will definitely come under criticism for this unconventional move, specifically being blamed for adding to inflationary pressures. Jim Rogers on CNBC voiced his dissatisfaction, saying he would rather have the ECB running the U.S. monetary policy than the Fed. These were very strong words indeed. We continue to see weakness in the dollar and expect the yen and Swissy to outperform in the near term due to unresolved fundamentals that in turn are driving riskier asset prices. Japan had an interesting morning. Their GDP annualized surged past the market expectations to 3.5% versus 2.3% that was expected, while the quarter-to-quarter rose to 9% versus 6% that was expected. Their consumer confidence slipped slightly to 36.4 versus a 37.7 that was expected. However, the focus was on the political wrangling surrounding the nomination of the new BOJ governor. As more or less expected, opposition DPJ has rejected Minuto as the BOJ governor and Ito as deputy governor, but has accepted Shirakawa as one of the deputy governors. At this juncture, it is clear that these positions will not be filled by March 19th. The government cannot either resubmit Muto's name or find a new candidate. Given the present obstacles that the Japanese economy is facing, it is very unfortunate that the BOJ lacks a strong governor to steer the monetary policy. Given that the yen is not trading on underlying fundamentals, but on larger macro themes, one can expect nonetheless to see some support for the yen. Today's key release was the Eurozone's industrial production. The recent stabilization of the industrial surveys, specifically the PMIs, suggests that the sector is prepared for a good start to the year. Since the data proved to be positive, we should see a euro rally. That concludes our news broadcast for today. We hope you are finding this beneficial with your trading. Before we sign off, we would like to invite you to visit our website at www.succeedinforex.com. There you will find information about our Traders Training Center and also a link to our Yahoo Forex forum, also called Succeed in Forex. Have a great day and make lots of pips. Happy pipping.